Hi guys, welcome to this Facebook Live. It's great to have you guys tune in at this hour. The markets have shut trade for this new trading week, and we're going to be focusing largely on how trade panned out, and also the fact that we are stepping into the new earnings season. Q1 earnings for FY19 will start rolling out. TCS will pretty much lay out the red carpet for Q1 earnings. And so will IndusInd Bank for the large cap private banking names. So do send us your questions. I have about 10 minutes with you. So it'd be great to get you as much perspective as possible on how to approach this earnings season. Largely, we're going to be watching out for turnarounds in this earnings season. We're also going to be watching out for mid-cap companies and small-cap companies coming out with their numbers, because if the earnings in the mid-caps and the small caps, come out pretty much in line with expectations or beat expectations, then that would act as a bit of a support really for the markets, so to speak. The carnage that we are seeing in mid-caps and small caps, the sell-off that we've been witnessing in mid-caps and small caps, that would perhaps find some support if the numbers look good. I just want to quickly run through some of the questions that we are getting in. Himanshu Desai is asking, why are markets ignoring negatives, all the negatives right now? Himanshu, I think the market is not really ignoring all the negatives right now. What do you mean by negatives? You could qualify that. The markets are not expected to see a big rally because, there are concerns globally and locally on the macro front, which would be pegging the markets a bit lower. If you could elaborate a bit more, my only perspective to your question, as I understand it, is the fact that the markets have largely been range bound. Yes, if one was to argue that given all the turmoil in global markets and all that cause of concern coming in from the tariff tensions between the US and China, would the markets get pegged back? The rupee's weakness, back home we're looking at the deficit situation still holding out, particularly the trade deficit situation, the trade balance on account of higher oil prices, which doesn't work well. So yes, I take your point on board. A weaker currency and higher oil prices is bad news for India's import bill. But should the market be a whole lot lower because of that? I don't know. I would reserve my comments there. But let's see how trade pans out for the markets. It remains to be seen whether or not things hold up in the near term. But Q1 FY19 earnings will hold the key to a certain where the markets go from here. Let's get in. Himanshu Sharma is asking about, tell us about a mutual fund. You'll again have to elaborate and help me out here. What do you want to know about mutual funds in specific? Ambishiva is asking about the way Reliance HUL gives support. How can we expect the market to come down? I would agree with you on that. I think you're also just corroborating the point that I was making. Aside of the oil marketing companies, which really took a nosedive on the back of rising oil prices and a weak currency, I don't see much fault with the markets right now. So just be mindful of that move. You guys are asking a lot of stock-specific questions. Let me just take up one question on the broad outlook for the markets. Sarfaraz is asking, above 10,800 market, are we bullish for 10,960? Well, today was a good day, right, Sarfaraz, for the markets. We rallied, closer to 10,900, and the broader market showed support. So if you actually take a look at Friday's session, today's session, broader markets have started showing signs of a recovery. Now, whether that goes down into specific stock performances, we'll have to wait and watch out for that. But I think for now, it seems like in the wake of earnings unfolding, you would see the markets be largely range bound. We could have a touch and go moment with 11,000 on the Nifty, but I think that would be short lived. That would not be conclusive in nature. Niranjan is asking, does buying index be profitable in the long run than buying any specific stock? That's a very good question, and Niranjan, I have to, got me thinking. See, it depends on your risk appetite, and I think in consultation with your financial advisor, you may want to cross-check the perspective that I'm offering here. You have index funds which have done really well, so rather than buying the index per se, which you can also do in your personal capacity, you can also buy an index fund, an index mutual fund, and do an SIP there, and perhaps then take a call after 10, 15, 20 years on how your money is compounded, or buy into a specific stock. Now, what happens is, if you're not somebody who's actively involved in the markets, who's tracking the markets on a day-on-day basis, it may be a little hard for you to manage the risk on that stock versus the rewards that it may offer, if you're getting what I'm trying to say. An index fund de-risks your exposure to a great extent, while assuring you a certain rate of return every year, which is what we can call compounded annual returns, essentially, on a compounding basis. So with a specific stock investment, you have to be very, very alert and very with the market, and you are responsible for that stock investment going right or wrong. You need to do your research, you need to speak to your financial advisor, study the sector in which the stock is, and then take a call. With an index fund, you can trust that the managers, and an index fund or an index ETF, basically passively managed instruments, so you don't really have an active fund manager looking at them, but you even so do realize that your money is part of a larger pool and is following an index, which is really a reflection of exposure to different sectors. So if one sector is going down, let's say PSU banks, which has a very small representation on the index, SBI is the notable one, but let's say OMCs, for example, if they're going down, then you have IT and pharma coming up, because a weaker currency helps our export competitiveness, and that balances out your returns. So maybe it's a story of not putting all your eggs in one basket, and that's the way you may want to look at it. But very, very important. This is a good question. I would, for all our followers right now, that's really a decision that you need to take, because a lot of people keep asking me this: should we invest in specific stocks, which are good stocks to invest in, the sectors to invest in. But mutual fund managers largely advocate the approach of de-risking your portfolio. As a retail investor who's not active in the markets, that would be the best way. I took a long time to answer that question, but I think it was an important one, and maybe in addressing this one question, I've been able to address a lot of queries out there. Okay, trying to get in some more questions. Gurpreet Sani, Hero MotoCorp, Bajaj versus TVS, what's the best bet? Gurpreet, I'm not going to do an either or in this situation. What I'm going to tell you is that two-wheelers as a basket is expected to see robust traction on the back of rural demand recovery. So if the rural numbers improve, you will see on the back of a good monsoon, you can see how it's been pouring cats and dogs in Mumbai. And I think the situation thus far with monsoon progression has been largely positive, which will fuel rural demand, and that will fuel the growth for the two-wheeler space. Between Hero MotoCorp, Bajaj Auto and TVS Motors is really a valuation call and the growth prospects. Bajaj Auto, remember, also has an export angle, so a weakness in the currency helps their business. But TVS Motors, they've been getting into some good types. All the three have had great monthly sales numbers. Track them from a 6-month perspective, and you would see how the pickup in rural demand is helping the two-wheeler names. We've seen the passenger vehicles being priced to perfection, except for, of course, Tata Motors, which has problems of its own. So now perhaps it could be the next wave of growth could come in from the two-wheeler space. And how they're trying to premiumize their products. Also expand their product offering to all categories of the market, especially addressing the needs of the rural economy. So that's something that you need to take on board when looking at essentially the two-wheeler space. Okay, I have time for one last question, and then I'll have to wrap up, sadly. Okay. Let me just take again, I'm looking for a generic question out of the questions sent in. Okay. George Koshi, view on Federal Bank and South India Bank. I'll give a broad view on banks per se, because IndusInd Bank is going to come out with numbers. Watch out for loan growth numbers for all of the private banking names. Is loan growth picking up? There has been a good indication on retail loan growth traction. The retail loan growth has been very promising. Loans which you and I take from the bank. So retail loan growth has been very promising. Corporate loan growth has been still lagging, but you need to look at those numbers individually for each of the banks. Watch out for their margin performance and watch out for what they've done on asset quality. Largely the private banks have maintained their asset quality. That's an issue more with the corporate oriented banks like ICICI Bank, Axis Bank and with the PSU banks. But even so, watch out for the provisioning made by these banks, their capital adequacy ratios. Take a holistic look at where most of the banking stocks or rather most of the banks are evaluating their business at the start of FY19, because the first 3 quarters are done. The financial report is going to be out in a couple of weeks' time, and you'll be able to ascertain whether or not banks have done a good job in the first quarter of this year. It'll give you some perspective on how to extrapolate their performance for the remaining 3 quarters. So, Federal Bank, South Indian Bank, and these are banks that have done okay. Federal Bank, of course, has had some marquee investors. So, pedigree-wise, if you go by the institutional investors who've held on to the stock, it's really shown promise. But you'll have to see consistency when it comes to delivery in their financials quarter on quarter. IndusInd Bank will roll the carpet when it comes to banking earnings. So I think they would give some indication. They have been consistent with their quarterly earnings over the last 2 to 3 years. But remains to be seen whether the entire banking space can indicate that things are looking up, not just for the retail loan segment but also for the corporate loan segment. And I think there could be gaps there because private capex has not picked up in a manner that the government had expected. Guys, I'm completely out of time. So sorry, but we'll catch you with your queries tomorrow at 4 p.m. We are getting into the earnings season. Catch Earnings with ED Now every single day from 8 a.m. to 4 p.m. That's where you'll get your best analysis on the earnings unfolding from corporate India for you to take the best investment decision. Thanks very much for tuning in once again.